Joining us this morning for what the data tells us and especially what it means for Fed policy, Goldman Sachs chief economist Jan Hatzius. Happy Friday, Jan. Good to see you.
It's great to see you as well. Thank you.
We've been watching some of the adjectives used to describe this report. Stunning, game changer. Goolsbee called it superb. You're usually a little more circumspect. What'd you think?
Well, I'm usually more circumspect because you have to take every single number with a bit of a grain of salt. This clearly was a very strong jobs report. But what I think is maybe even more important is that it confirms the message from other indicators. Third quarter GDP, we're tracking it at 3.2%. The claims numbers have been very encouraging, back to the 220s. And then on top of that, you have employment numbers that when we investigate sort of the underlying trend and smooth through some of the information, close to 200,000 underlying employment trend. That's obviously a very good place to be with inflation still coming down.
Some of the, I guess, either doves or hardlanders, whatever you want to call them, in recent quarters have been all about the revisions. Oh, watch out for these downward revisions. Have we turned a corner on that?
Well, August is often a month that does get revised upward. That was something that, we and others have been aware of. And again, we did get an upward revision here. I think it's true that in 2024, revisions have been predominantly to the downside, but there's no law here, and certainly not something that would tell you the economy is materially weakening. And again, you need to look at a broader range of indicators. And I think if you do that, it's pretty clear that this is still a very solid economy.
In today's report, the BLS said that there's no discernible impact from extreme weather. What's your expectation? I mean, obviously, October is still only 4 days old, but we've seen its fair share of extreme weather. Do you think it will have more of an impact in this month's report coming out in November?
Yeah, I mean, it's too early to tell because the survey week hasn't started yet. But it wouldn't be surprising if you got a temporary impact, which then reverses the following month. I mean, when you have these weather effects, the key question is really always, what is the sort of 2-month average? And typically you get a full bounce back the next month. So it's not something that I would put a ton of weight on at the moment. But of course, it will be important once we cut our October forecast in a month's time.
There's been some discussion about the port strike and this tentative agreement now, Jan. And maybe when you look at how much of the food basket was already in deflation before the strike, if some of this inventory that's sitting on docks now floods its way into shelves, do you think a little more food deflation is in store?
I think that's certainly quite possible. I mean, the trend has been going in that direction. And I think it reinforces what is still a very favorable inflation trend. We're still, I think where I would put more weight is probably the core numbers and the fact that the rent and owner's equivalent rent inflation data probably are going to show further deceleration. I'd also note that, while the labor market signals are still quite firm, it is clear that the labor market is now rebalanced. So the trend in wage growth, I think, is still back down towards the 3.5% range. And all of that, I do think, will continue to push inflation back to the Fed's 2% target in 2025.